another deep dive. Today I have with me Alex. Alex is from Odos. Thanks for joining me.
Yeah, absolutely. Pleasure to be here. Thanks for having me. It's a beautiful Friday, so looking forward to just hanging out on this summer Friday and jumping into some interesting topics.
Yeah, so I guess what I don't know exactly how to describe it. What is Odos?
Yeah, I guess important first question.
Yeah.
So you can think of Odos as, generally we're called things like a liquidity aggregator, a dex aggregator, smart order routing, but really what all of that means is we're kind of the most efficient way to trade tokens or to kind of compose transactions in DeFi. And what I mean by this is, you can think of Kayak, kind of these travel aggregators. It's all aggregation theory, which is that there's lots of places to get liquidity in DeFi, lots of dexes, lots of individual pools on each dex. And then with each of those, you have this massive kind of graph of complexity that Odos will route through for you and make it really, really simple. So we can get you the best prices with the most efficient routes and then kind of abstract all that complexity in the background. So from a user experience perspective, it's hopefully pretty straightforward.
Yeah, I mean I used you guys I tried you guys out like 2 days ago. It worked. It was super clean. So uh
Nice. Worked, or was it a good experience? Or
well
was it
it's-
painful, but you figured it out?
so like I wanted to buy one position and I had like three different tokens I wanted to move into this position. The first two tokens it works without a hitch, but then the other one I had a wrapped token on Polygon. Um, but so I had to unwrap it first. And then I also had to apparently like it was giving me an issue doing the unwrapping because I've been around Polygon since like long before it was even Matic. And so like it was like we were one of the first testers. So my RPC node apparently was dead like in my MetaMask wallet. So I had to like go and give my MetaMask wallet a new RPC and then it worked. Which I'm like normal users would not be able to figure this out. So
Yeah.
crypto still needs to work, but it had nothing to do with you guys. Um,
Well, but still, I think there's a piece of communication that it sounds like we can improve there just to like help people troubleshoot faster. So duly noted. I will take that as feedback and try and get it out in the next update.
yeah, well, I mean, and then same with like eventually, like yeah, I mean, we can talk about the vision for it all and all of this stuff too, but it's still like switching the, what network you're on, things like that. Like it's very, very crypto-y still. Uh,
Right. Yeah, and kind of unrelated to what we're doing at Odos, there are some cool projects kind of working on improving that we're hopefully going to be kind of bringing to the platform in the near future. I don't know if you've heard of teams like Privy, Dynamic, Wallet Connect, which I guess is Reown now. Um, they have some really cool kind of embedded wallet technologies. I don't know if you've heard of EIP 77002, but that brought kind of a lot of additional functionality to even standard EOA wallets. So you're exactly right. The UX is still kind of garbage, but teams like this and EIPs like this give me hope for the future that we're moving rapidly towards a better UX for the ecosystem as a whole.
yeah, well, I mean, that's like, but the bigger question I have for you guys is like, on this whole, so like let's say I have over here I have wrapped USDC on Polygon and I want some, other token that only is on Optimism. Like what's the route that you guys have to take? Like let's say there's certain pieces like you're clearly not bridging them. This is a problem like with bridges. Like bridges are like, well, bridges are super, super slow, right? So like to go from Polygon to Ethereum is relatively fast, I think. I think it's like 12 hours for their or how long for their official bridge? No.
So the canonical bridge is, yeah, something like I think closer to 3 or 4 hours, hopefully not
Okay.
12 hours these days. But yeah, I'll let you finish your question, but I think I know where you're going with
Well,
this.
then same with like Optimism to Ethereum. It's like technically what, like 7 days for a canonical bridge.
For the
So
optimistic roll-ups, yeah.
so you literally just have to like sell out of it and buy it back on the main chain, and which is like what everybody does. And I think that's like what you guys sort of do or plan to do.
Yeah, so fortunately we're staying away from that because, kind of I would say 2 years ago, cross-chain became obvious. We said, okay, how are we going to kind of embed this in the user experience? And short answer was technologies did not make it a pleasant user experience. So as much as there's value to having that function in our experience, in our UI, so that users don't go elsewhere to have to bridge and then come back to Odos, right? You lose users as they go through that transition. Um, the user experience of putting that in our UI was actually so bad we were concerned we are going to lose more people dealing with that chaos, right? So it's like, let's just do what we do really, really well on same chain optimization. But now actually, uh, end of this week, well, I guess it is the end of this week, and next week we're rolling out cross-chain with a cross protocol. So they solve a lot of these UI constraints with an intent-based system. So I don't know how much you want to kind of go down the rabbit hole with the intent-based systems, but you basically have a network of participants that are called solvers or relayers or fillers, who will take on the risk of perhaps a reorg or the money eventually arriving to them on kind of source and destination chain. So these folks will front the money on the destination chain. They'll say, okay, we've received it on the source chain. We're going to front it on the destination chain, and we're going to take on the risk of canonical bridges eventually showing up and rebalancing our inventory periodically. And this makes, from a user experience perspective, much, much better, um, because you end up with couple of seconds is now what we're talking about in terms of being able to complete a cross-chain transaction. So to your point, I have token A on Polygon. I want to swap to token B on Optimism. We can now do that really, really quickly, because you have kind of these network of participants on the across kind of network that are willing to front the token on the destination chain before it's technically arrived, like from a confirmations perspective and things like this. And kind of the beautiful thing that we can do along with that is not just generally you'll use a bridge token, something like USDC or a stable coin to like transit the bridge, just so that you don't have any weird slippage, you don't have any weird volatility on the token as it's kind of going from chain A to chain B. And then that source and destination swap that's happening into and out of that bridge token is our bread and butter. So that's how we can compose with somebody like an across to make a really nice, seamless cross-chain swap, and still have a better user experience, right? With just a couple of seconds waiting for it to arrive, rather than, as you're describing, the days of old where it's really, really painful waiting for things to show up.
Well, like it was the days of old weren't that bad because sometimes you would just forget about it. And then and then like, 2 weeks later you'd be like, oh man, I totally forgot I had $1,000 coming to me. And it feels pretty good.
Yeah, I don't know. I mean,
But
pros and cons to that.
I mean like I feel like yeah, no, to kind of take it like we'll take it more philosophical. We're like jumping in the deep stuff right away. It's like I feel like this might be a move backwards. Like a lot of times, like the joke I've heard on Intense is like Intense is just Wintermute filling you off chain, right? And like before all the bridges, like before there was any interop in Bitcoin land, like how did you move across chain from token to token? You went through a SEX, right? Like you would deposit it on Binance and then you would go withdraw it over on a different, you would sell it and then withdraw it on a different chain. And
Yep.
that's essentially what's happening here, right? It's just like now we've automated the entire thing and we say like, well, any exchange can do it, so it's okay, right?
Yeah, I hear you. I would
Okay,
say
talk me out of it.
we still have like the redundancy of the native bridges, right? So we can always fall back on something fully autonomous like CCCP, which is Circle's cross-chain transfer protocol. Um, so if we're using USDC as the bridge token, CCTP can be like the worst case scenario, which they wait for full finality. These get into the longer wait times, especially if you have super large trades that you don't want to deal with fillers and you're willing to be patient. You just say like, hey, I'm going to move $1 million across chain A to chain B. We can just do that. The like protocol, complete decentralized, kind of option still exists as a fallback. But I think the bigger question, perhaps, I'm curious to pick your brain on this as well, is like, to your point on philosophy, there's like this trade-off between full permissionless and decentralized and censorship resistant and all of this. And then there's user experience. And the bigger question that is kind of maybe painful to ask is like, do users care about decentralized, permissionless, et cetera, et cetera? And so I think regardless of if they care, we need to continue to build infrastructure in this way. So like chains in this way to be uh, permissionless, decentralized, etc. But as we start getting more mature into applications, I don't think all of the applications need to be fully decentralized and permissionless, etc. Right? I think there's a bit of a balance there, and I'm curious to kind of pick your brain on what you think is important with that respect as well. Um, but I think cross-chain as a feature is kind of bleeding into this. Um, does it need to be completely, I guess permissionless and decentralized and blah, blah, blah? Or is it okay for these market makers to fill for an improved user experience and actually get better adoption? Knowing that still the underlying blockchain technology and kind of routing contracts and things like this are, fully immutable and on chain.
Right. Well, I mean, I guess we can kind of bring it back a little bit. What would you say your role is in TradFi? Like, does this system exist in TradFi? Like, what's the like assuming we become TradFi, what's the end game for Odos if it was TradFi? Like,
Yeah. So the analog in TradFi is called smart order routing. So smart order routing is basically you have a whole bunch of liquidity venues still. So, in this case, it's just traditional markets. And you're trying to figure out where I can basically spread a trade across multiple markets or find the best market for a trade, things like this. And so, same kind of analog, same idea. It's an optimization problem at the end of the day, to say, how do I maximize output and minimize maybe fees and things along the way? And so, the future of Odos and going into, if DeFi is embraced by TradFi, um, the future looks somewhat similar to say, now we've expanded the realm of possible assets that we can kind of trade and explore and play with. It needs a completely different kind of optimization approach, which can handle this massive increase in complexity. So now we have a bunch of chains, we have a bunch of assets, we have a bunch of liquidity sources on magnitudes more than we have in TradFi. And so existing TradFi smart order routing systems are quite sophisticated. They're good at what they do, but they're not built for kind of the scale and kind of amount of data that we're ingesting with DeFi. Um, so that's going
yeah,
to
like
be
usually when I think like order routing and TradFi, I think one or two exchanges, usually it's about like shredding large orders, right? Like you're trying to just make sure that you can trade size and not move the price, right? Um,
exactly.
but I mean,
Yeah.
do you guys do a large portion of that, or probably like is that something you guys do, or is it more on the retail front end side?
So we do a bit of both. So these
Okay.
days, we're 20% of our volume comes through our front end, 80% of our volume comes through API integrations. And so API integrations can be with like wallets, they can be with other DeFi protocols who have a swap function or meta aggregators, we call them as well. Your DeFi llamas of the world, your Trader Joe's of the world, or I guess LFJ is now what they're called. Um,
What's LFJ mean?
well, let's fucking Joe. I don't know if I'm allowed to
Uh,
say that on your podcast, but there it
yeah, of
is.
course. Yeah, no, I hadn't heard that one. That's good.
Yeah, there was they're not allowed to use Trader Joe's anymore is the short answer there. Um but so lots of places for folks to integrate us through the API, and so you can see the profile of trader can is quite broad. So yeah, we have retail traders who are doing a couple $100s a trade. We also have larger traders who average trade sizes, tens of thousands. And then we've seen upwards of $10 million trades across Odos. And those get quite beautiful and sophisticated just as like a nerd kind of geeking out at what the algorithm produced, which is these massively complex and spread out trades across tons of liquidity sources. To your point, trying to spread the load and minimize price impact. So, um, yeah, lots of different kind of use cases for Odos and profiles of users.
Yeah. So I guess, we can kind of keep on this. Like, where would I know you've been in the space for a little bit of time now. How have you seen this evolve? Like, what was, like I know that's always interesting when I talk like oracles. Like, it's really been like a complete 180 from 2019 when we got into now. Like, how have things like sort of switched for you guys?
I would say there's been maybe two things I'll highlight. One is like optimistically, I think there's been a shift over the last 2 years, year and a half, 2 years, where people are really tangibly understanding the value of an aggregator just because like DeFi has blown up, right? You go back to DeFi summer of 2020, it was a lot of fun, but there's really not that many protocols. They were the first of their kind, kind of brand new, ideologically interesting, but without the fragmentation and kind of the mass that is too much for a single person to kind of price check across multiple venues. Without that, we don't add a lot of value. So now that we have this extreme fragmentation, tons of dexes, tons of liquidity sources, people are identifying this value for aggregators such as Odos. I think the second thing I'll touch on is the way in which we can play with other protocols rather than just dexes. So I think at first you think, okay, let's use multiple liquidity sources to trade some tokens and minimize price impact, right? And you're like, okay, I'm going to get the best price. It gets a lot more interesting when you start saying like, okay, well, these money Legos, as we've all talked about them in the past, are beautifully composable, and Odos can compose them within a route. So not separate from a route, not like an additional feature, but actually within a route. So we can expose access to yield-bearing assets on Aave. We can expose uh, liquid staking tokens for yield as well. We can route through any like 4626 vaults that people want to put together vault strategies. As long as the end result is an ERC20, we can basically route into it, out of it, through it, around it, things like this. And I think that's like the next unlock is helping people understand really the power of that. So you say, well, why does somebody care about, like, I don't know, we'll keep it simple, a liquid staking token, right? You're like, okay, I want my Lido staked ETH for yield, but I only have USDC in my wallet right now. So rather than having to go somewhere, swap from USDC into ETH and then deposit that native ETH into Lido just to get your staked ETH, you can do that in a single transaction. And we can give you the added benefit of checking the market to see if depositing natively into Lido is better or trading on the open market for staked ETH is better. There's sometimes a little bit of arbitrage there you can capture. Um, so that's kind of a super simple example of improving the user experience to say, like, these are the token or tokens, as you alluded to earlier, that I have right now. I want to achieve this function, and Odos composes that trade kind of seamlessly for you. So I'll stop blabbering, but that's kind of the
Yeah.
exciting future that we're building towards very aggressively, and that's definitely changed in the last couple of years.
Yeah, I mean, how would you say like liquidity's changed too? Because I know like a few years ago it was like all AMMs, and now it's like not like is Uniswap an AMM even anymore? I don't even know. Um, it's like weird
Yeah,
now. And like you
yeah.
usually like, and I mean for you guys, like I always wonder like what risk do you guys have that like the stuff disappears before you get to it, and how often does that happen?
So I guess two-part question. First, Uniswap, I'd say still AMMs. I know with like Uni v4, they have hooks and they're doing some kind of additional logic before, after, and during some of that AMM interaction, but fundamentally is still a curve that defines the trade of two assets. Um, but you're right, there's been kind of introduction of uh, on-chain order books. There's been introduction of RFQ services. So we do also support RFQs for private liquidity and more, right? Kind of more interesting algebra style pools that are still AMMs, but doing things differently. Um, and on and on and on. And then I guess the second part to your question of like does state change significantly such that by the time we go to execute a trade, it's not there? I would say because we have such deep integrations across all of this liquidity, we don't generally run into that issue. Unless you're trading a super long tail asset that's only supported by like a single pool, you're more likely to run into that issue. But most things end up in multiple pools pretty quickly, and then we have flexibility to route across really any of them that makes sense to get you the best price.
Well, because I see like, like the popularity of like hyperliquid, right? Like chains are going to process cancels first, it seems. And so like what's the end game for you guys? Like it's like it almost like hurts UX in some ways.
Absolutely. And we obviously don't want any reverts from user experience perspective. So that's a terrible UX. So generally, again, we don't really run into that issue too often. So our goal is to minimize that as much as possible.
And
But
like how,
it's,
yeah, I mean, I always wonder like how price sensitive are people to some of this?
yeah, that another great question. I would say folks that use us currently are more price sensitive than like your average retail user because they are coming to us with the recognition of like the value we add. So they're interested in like that improvement that we can deliver
Right.
in terms of value and output. And so they're going to say, uh, hey, I'm coming to you because you're going to give me a better price. They don't necessarily want to be wrecked by 80 bip fee that, other protocols may be charging on wallet swaps. So very price sensitive at the moment. But I think as we introduce more products that kind of abstract the trading experience and make it a bit less tailored to just advanced users, we're hoping to broaden the interest to less price sensitive folks, for obvious business reasons.
Yeah. No, like MetaMask swap is just awful. Still,
Right.
it's it's no good. And this
Yeah, and I mean it's I guess you see very directly with somebody like a MetaMask, like the value of having that direct relationship with the end user. Because I think the more you have that relationship directly with the end user, the more you can kind of vertically integrate and add value, but also monetize, frankly, more effectively. So they see like, okay, we're MetaMask. Everybody uses us as the wallet. We're sticky. People don't want to go elsewhere. They want to just be focused kind of in this wallet experience. And then for that convenience, they know that they can charge a pretty massive fee. Um, so yeah, something to be, I guess, learned there as well.
well, I mean, this is like web 101, right? If you get user
Right.
eyeballs, that's the king almost over product and or anything else. Like if you can keep attention there, you can monetize it. Um, which is
Absolutely.
yeah. Yeah, so I guess the one question, is your guys' game to become like the best front end for trading? Is this where you see it kind of going? Is like all these wallets and DEX aggregators are gonna have to compete as a front end, or is it more on the solving side, like you guys are the smartest math people or something?
Yeah, I guess frankly, I think it's both. And so this is like
Can't say
maybe
both. This is
yeah, I know, maybe a cop out answer or like an ambitious answer.
right.
Um, but without being kind of the best max guys, without being the best at optimization, we don't have an edge. So there's no point in us existing. So we have to have that. That's like fundamental. Now the next question is who is our kind of target audience? Like I think primarily between like retail and API users. I think right now we're hyper focused on API users, but we cannot leave behind the front end users, right? And I think that's very important, as we were just talking about with the MetaMask example. Having that direct relationship with end users is incredibly important, especially in crypto. We have a vibrant community that is very kind of well informed as it relates to DeFi. I mean, they're some of the most impressive people that I've seen. Some of the questions they bring in Discord are very highbrow, like well informed, educated, smart questions to be asking. Um, and so we certainly don't want to not focus there. But we do see incredible growth via API, right? Because we can get exposure to other people's communities as well and deliver an incredible product to them. Um, so I know as boring as it is to
Yeah.
say both, they have to go hand in hand for us. Just because the brand recognition, kind of growing the brand and having that direct relationship with users opens up a bunch of doors from an API perspective and vice versa. When people go to DeFi Llama and they see Llama Swap, and we're always ranked at the top above our competitors, there's kind of additional value that we get there as well as a kind of a billboard, proving our worth type perspective. So that's at least at a high level how we kind of think about it at the moment.
Very nice. Yeah, I mean, I guess would you say, are you the BD guy there?
So I lead product and strategy.
Product and strategy. So is that a yes?
Sort of, yeah. We're a small team, so I do also wear a bit of the BD hat, but yeah, it's lots of hats these
Well, I
days.
know I met you at a conference and then you're going to another conference, so I feel like that says BD guy, right? This is
Yeah, yeah, to some degree.
well, yeah, I mean, I feel like every early employee or founder, it's like your number one job is probably meeting people and connecting.
Yeah,
And it's like that's just it's like the reality of businesses, I guess.
yeah,
Probably not even crypto. Um,
yeah. And I love it. I mean, what other industry can you travel the world and see people like all over the globe that are just as passionate about the space as you are? You know, it's hard to imagine many other industries or kind of places that give you that opportunity. So yeah, totally agree with you.
Well, yeah, I mean, I would love to pick your brain on that a little bit. What would you find is because like a lot of people, almost like who watches crypto podcasts, it's like other people who work in crypto. So like, what's worked for you over the years? Like you guys are doing well. Like, what's worked? Like, obviously having a good product is, but like, how do you think about meeting people and getting, especially like, I mean, there's the retail side's one thing, and then there's the BD side for like a wallet integration or like a biz to biz B2B kind of sales is different.
Yeah, I think so. B2B is obviously very relationship based, at least from what I found. So fortunately, when I joined Odos, I had some existing relationships that opened some doors, and then you had those folks know other folks, and they open doors. And as long as our product continues to speak for itself, we do get quite a bit of inbound interest, which makes my job a bit easier from that perspective, because folks will kind of tell their friends about us in pretty powerful ways that open the door for conversations for API integrations. But of course, there's the kind of less romantic, more strategic approach, which is, I'm also a bit of a stalker on LinkedIn. I'm, kind of putting together Notion documents of what are my objectives for a conference? Who do I want to talk to? Who's going to be there? Who do I know is going to be like at what events? What side events do I need to prioritize to kind of be surrounded by the right group of people, right? Because you can go to all these side events. Some of them are going to be folks that are maybe hyper specific to, let's pick something random like the Cosmos ecosystem. Great, smart people, wonderful ecosystem, but not relevant to Odos because we're not there, right? So probably don't need to go to that side event. If there's a side event that's specific to institutional adoption of DeFi, that's something that I need to make sure that I'm at. So there's a bit of the, in the background, perhaps a bit creepy strategy that's going on just
It
to
sounds
make
like
sure
you
I'm
picked
kind of,
the bad events. Like this is
yeah,
that's like not the exciting events. But yeah, I feel like you could have like a score of like number of people who answered on LinkedIn and then like a degen score for each chain. Could be, yeah.
yeah, that could be interesting.
Don't pick up on LinkedIn. But yeah,
Yeah,
no, I think, for all that people talk about, like there's crypto's different, right? So we're moving into this permissionless, anybody can do anything type thing, but then it's still, kind of what we found too is it's very relationship based still. It's
absolutely.
there's as much as you'd like to think there's millions of people out there, like you can like meet almost everyone running a company in the space at these conferences, right? And
Yeah.
um and yeah, just trying to figure out where everybody's going, where you line up is crazy important. Um,
Yeah, and I mean, to your point, like everyone is there. So if you're not there, I'm not going to say you're missing everything. But I do think that there's a ton of value to going to these things, which is why we continue to go to them. Just because there's something special still about in-person interactions, like aside from just like having relationships, you can maintain those digitally or whatever. Um, but in a space that we're like chronically online and just always interacting in Telegram or digitally, there is something still really special about like seeing a face, shaking a hand, getting to know like what is your native language, like tell me a bit about you, like what do you do in your free time. I know everyone wants to say nobody has free time, we're all working so hard building stuff, but people still have hobbies, right? And so there's something that happens naturally in person at conferences and things like this that you don't get when you're kind of just in Telegram or Discord or wherever, with very specific goals as to why you are sending a message, that I think is incredibly valuable.
yeah, well, I mean, it's weird in some ways, crypto likes to use the term community, right? Like we like the idea of creating these spaces, but whether or not we're actually good at it is probably debatable. But it is like we're almost trying to yearn for those trusted spaces, if you will,
Right.
in a trustless manner. I don't know if you've had any thoughts on that, or if there's even a question there. But
I mean, I think about trust all the time, right? Because that's from a product perspective, we're trying to build trust with the user so that they continue to use our product and they tell their friends about our product. Um, so it's interesting that you like position it in this trustless environment that we're designing, um, which actually is a quite interesting way to position it. So I don't know, like I guess we always want it to be trustless, but you need to trust to some degree who you're using, what you're using, and why. Especially in a space like crypto. I mean, we see scams all the time. So I think if you can build like trustless infrastructure, that you don't have to like kind of mentally compute like what's going on here. Are they taking advantage of me? No, it's like trustlessly, verifiably not taking advantage of you and just like objectively executing as a blockchain is expected to. Then it gives you the freedom to make kind of application choices. And I think applications and brands will always be an exercise in trust. So that's at least kind of how I see at least initial thoughts around kind of an interesting question you posed there.
well, I mean, like in some ways, like you would even talk like the whole risk of doing a cross-chain swap is like you want to make sure the whole thing doesn't reorg, like the social layer doesn't reorg, and like yes, we have this idea of like crypto economic security on these chains. Like theoretically, people should lose money, and theoretically, there's billions of dollars behind it. But then at the same time, you're like, well, I want to meet the guy in person
Yep.
before I use his app because like that's like I'm actually I feel like have we like created so much complexity that like you basically like it's the same thing. Like I just want to shake your hand and figure out whether or not I trust you or not because this thing's so complex that I have no idea whether or not there's any real money behind it anyway.
Yeah. And especially as you're kind of graduating up in trade sizes or investment sizes, like you need to trust to some degree. Because I mean, sure, if I'm spending like $20, like what does it matter? We're gonna be okay. If you're starting to move thousands of dollars or tens of thousands or more, I mean it with knowing full well that there's like no recourse if you send it to the wrong place, like that's just
Right.
how the blockchain is designed for the best, right? Then you have to trust to some degree, get to know that person. So
Yeah. No, it's but I guess that we can move in there. Like what do you see? Because you said that the design therefore is for the best, right? Like what do you see as like kind of the future vision of DeFi? Like is it the standard we tokenize everything and have millions of chains? Like what does it look like here?
Yeah, I don't know about the millions of chains idea. I know, folks are getting really kind of intrigued or interested by app chains and et cetera, and everybody has their own chain, L3s, et cetera. I don't know if I'm sold on that unless we find a way to really seamlessly abstract chains in the background. So then it just becomes part of like the application infrastructure layer that users are completely unaware of. That requires a level of interoperability, native interoperability that we just don't have yet. So that would be cool if we could get there. And then perhaps I become a bit more open-minded to millions of chains just as like a function of infrastructure. But I think, the future of DeFi still is like building financial access that does not discriminate for everybody, right? So they need to be permissionless. They need to be um, kind of these beautifully open protocols that, I said the example of by design was knowing that chains, you can't just roll back a chain and send money back, right? We don't want that because it opens Pandora's box for all kinds of uh, weird edge use cases and manipulation, right? So I'm still perhaps like a bit of a, idealist when it comes to like why does DeFi exist in the first place? And it's not just a casino, it's not just speculation. It is intended to really broaden access to financial markets and cut out a whole bunch of middlemen and kind of bring this new wave of efficient technology um, that I think, we're going to continue to watch that grow. And it is nice to remember how early it is. I know everybody says this, but I think people also get frustrated with why is DeFi still having issues? Why is DeFi still having hacks? Or why is DeFi still having uh, inefficient protocols? Like everybody, you want to compare DEX to a centralized exchange. Of course, they're not the same. Of course, they're not. Like a single DEX is nowhere close to as efficient, capitally efficient, as well as like uh, data efficient as a centralized exchange. But it's a foundational piece of the growth for the next system. And that to me is still quite compelling. So I think like, yes, we're going to continue through our growing pains. Yes, it's going to be a little bit ugly and not beautiful, but we're making huge leaps forward with that, especially this year. So we just got to keep our eye on the prize. And I think DeFi will continue to grow um, kind of aggressively in a way in which people don't get pushed out or forced into um, I perhaps this is a hot button topic, so this is I guess somewhere in the middle of this talk, I should have a disclaimer: my personal views, not the views of Odos. But
Hopefully.
um, but I don't know if I'm a huge fan of pushing everybody into KYC either, right? I think like that can be abused and manipulated in certain ways. There's reasons for it to exist, and I'm certainly not trying to support the funding of terrorism, but um, we've seen so many examples through history where access to banking, access to loans, access to payment systems or structures uh, kind of can be used to manipulate people that we just don't want it to. So I think that's kind of where DeFi continues to build and continues to do quite interesting things um, in a space that's very much needed. So I'll pause there. I know that was my soapbox for the afternoon.
No, it was good. I think it's really tough because a lot of people like we went to the Monetarium conference in DC, and it had a very regulated view of where DeFi was heading. Like there were going to be regulated dexes, tokens are going to go, and there's going to be some registration process most likely, and you're going to have a KYC provider, an audit provider, and it'll most likely this is how tokens will trade seamlessly with stocks on these regulated exchanges. Um, that's one vision of the world that's probably more on the extreme regulatory side. Um, and is one that most people, crypto people probably don't really want to happen. Um, but then at the same time, it's like, like what are we building here and what's sort of the end game of what's going on. Because it seems like, the end game is almost everything we've built is slowly centralizing, right? Like
Right.
most and it would be really hard to start like a new dex structure nowadays. Like you want most of this stuff is relatively, yeah, the big players are pretty solidified, and it's usually run by one or two people, a handful of companies. And so it's like, well, how can we prevent that? And nobody's quite figured that out yet. So like if we continue to move in this direction, like they're probably going to get regulated anyway because we know who they all are. Um,
Y- Yeah. So I guess my thought here is that it's important to, I think, remember that they can both exist together. So I think we'll just like DeFi is this beautiful addition to the existing system. So to your point, I'm actually very intrigued and excited for what Reserve is building around DTFs.
for
I
sure.
think that is a massive unlock for the future of DeFi as well. Whether we build like a completely unregulated version that's like non KYC required, and then they have theirs that is like more regulatory friendly. I think they can exist in parallel, and that's awesome. So I know we are seeing it feels like very much centralization of a lot of things currently, but I'm optimistic that we'll just continue to have kind of a spectrum of protocols that exist so that folks can have kind of whatever risk tolerance they want or whatever regulatory requirements that they have. There's a spot for them to participate kind of on the new infrastructure layer. So yeah, I guess my only 2 cents there is that I think it's important to not be one or the other because I think there's a lot of folks, especially how polarizing crypto Twitter is. Like people are like, oh no, it's either going to be like these centralizing forces and DeFi is going to die, or it's we have to fight the centralizing forces and only be decentralized and permissionless. And I think no, it's folks are going to find somewhere on that spectrum that they're going to decide to deploy their protocols or their applications, and they're going to address certain markets, and all kinds of different end users have different tolerances for
Yeah.
regulatory risk, and so that's kind of the future, at least in my mind.
Yeah, I mean, I think a lot of the disagreement comes in whenever we start trying to figure out if when we all think we're talking about the same thing when we're
Right.
not. Like I think like having like US companies and US housing stock trade on trade it that's a different question than like having a black market currency that I can get around sanctions with.
Yep.
And that's very different than having like a decentralized Twitter that I can't be censored from. Like we probably want different regulations and different systems for all of them, but I feel like we lump them all into like Ethereum should be able to do it. And like and then we argue over like why it's failing. Um and it's like no, like guys, it probably shouldn't be all of these things. But yeah, and that's like, and I feel like sometimes even those goals are at odds with each other, right? Like if you're running a decentralized Twitter, like hyper financializing it and regulating it is going to be like death to the thing, right? Like this is like not good for the entire system. Like you want to do the complete opposite. And then like same with like the black market currency, it's like you can't have that and USDC just won't work. Uh,
Yeah, absolutely.
and so, yeah, like I don't know which one's going to get product market fit necessarily. Uh,
A little bit of both.
yeah, but I think like we're trying to build them all on the same platforms, and
Yeah.
it gets weird um, whenever you're the middleman doing high efficiency trades between both of them. Um, so.
It's great. The more fragmentation, we still win, right?
Well, yeah, it's weird in that like the way that we've built crypto necessitates middlemen, right? Like, like you
Yeah.
kind of like back to how we started about this with interop. Like it would be really easy for USDC or even chains themselves to be like, listen, we have zero knowledge proofs now. You unlock the tokens on this, you lock them here with a zero knowledge proof, and you unlock them here with a zero knowledge proof. Bridging is done, right? That's it. Um, but like nobody wants to do that because the UX isn't necessarily that great. So instead, we'll like necessitate there's this middleman that just buys and sells assets on both chains, and it's like, well, I guess it works. So,
Yeah, yeah.
uh,
I yeah, it's interesting that you bring it up in that context because, so from a bridging perspective, I think the UX improvement for having this middleman kind of buying and selling on both sides, the intent-based stuff is a huge value add just from the UX perspective. My hot take on perhaps other solver systems, like same chain solver systems, um, big names like One Inch Fusion, CowSwap, etc. Um, I'm not so convinced of their sustainability. And what I mean by this is if you have to incentivize participation of these actors, these fillers, relayers, solvers, they need to take a spread or a fee of some kind. They need to be incentivized to participate, one. And then even once they're participating, they have a certain degree of OpEx, like they're running some, I don't know, AWS bill or something like this in the background. They need to make enough money to survive. So there's kind of this inherent centralization that exists, or consolidation, I guess is a better word, that exists around the number of participants. So you don't have long tail participants because they just don't make enough money to keep operations running. And then amongst them, they need to still make enough money and be incentivized actively, but they're taking fees, spread, whatever you want to call it, in a way in which is not, in my mind, directly aligned with the value add of the protocol's existence. So if you're looking at like, One Inch Fusion, it's like, okay, One Inch Fusion is here. Maybe they're solving some UX problems with that, but it's meant to be like, oh, competition drives better prices. But if you have all of these actors taking fees out of the middle, are you really driving better prices? Versus that's kind of been a very intentional design decision with Odos is that we didn't introduce one of these solver markets because we have kind of complete control of the supply chain. And you can say, oh, do you trust Odos to give you the best prices if you don't have this kind of competitive auction mechanism in the middle of it? Well, I'll just tell you, go look at the market. Like you're still going to have competitive forces across the market with our competitors. So you can say, check our price against a 1 inch price or a 0x price or a matcha price or whatever. We're still going to be one of the most competitive quotes you're going to get without kind of that unnecessary middleman introduction in the supply chain, if you want to call it that. Um, so it's interesting the way you made me kind of recognize my own perhaps like diversion there between like so as a bridging technology, I think it's quite compelling. As like a price competitive function on the same chain, I think it's to your point on middlemen being not necessary in this like kind of arbitrary reintroduction of middlemen for um
but
I
I mean,
guess
like, how many are
UX.
there? Like, would you say it's a decentralized market of solvers?
Not really, frankly.
It's a
You're gonna
small
have
group
like
of people, right?
five, yeah, five-ish, 5 to 10-ish that basically play the game across
All
all
of
of the
them.
marketplaces. Yeah.
Yep. Yeah, I mean that's what you find with everything, right? Like whether
Yeah.
it's validators, you have 5 to 10 big validators that are 90% of the power. You have proof of work, same thing. Um, it's sort of these really hyper power laws in crypto.
Yeah.
And I, yeah, and then it's just like, is that a capture risk is always the question. Like, you wonder, because that's like, I always wonder, we have the issue like with the Ethereum scaling problem, right? Like now it seems like they want to go back and scale the L1, but like, how do you, now that you have all of these infrastructure providers and rollups that are so dead set on you not doing that,
Right.
that you're like screwed, right? Like you can't go back anymore without like significant backlash. And like, what do you see as the risk? Like, the more we build up this MEV solver, the basically third party intermediaries who are making tons and tons of money off of it. Um, I don't know.
Yeah, hard to unwind that one.
Yeah. Well, I mean, this was, yeah, I know we're we're coming up a little bit on time, but we're jumping into, I was listening to like a Michael Lewis, Flash Boys from back in the day, and he said like arbitrage in general, it's like if you see a pipe and it's leaking oil, like arbitrage, like finance and arbitrage people basically make money reselling this. They capture it rather than just fixing the pipe. And then, in fact, they actually make the hole bigger, as big as they possibly can, and prevent you from ever fixing the hole in the pipe. And I feel like it's, like that's MEV and arbitrage are sort of leaking value from, more of a closed ecosystem of people. Um, any
Yeah.
thoughts, I guess?
No, I
Or is
mean,
that
first of all, that's an awesome kind of visual leaking pipe of oil, like, oh, let's make the hole bigger. Um, I think fortunately for us, there are really brilliant folks that are actively fighting against that in terms of like patching the hole.
right?
So I think like there will be arbitrageurs who are currently looking to make whatever profits they can while those opportunities exist. But I think like fortunately they're not the same people who are in charge of the design of the protocol. Um, and so maybe naively so, I'm optimistic that a lot of these problems will be solved. There's also, if you think of it as kind of like an interesting thing that we do, whatever market inefficiencies or arbitrage that exists, like the way Odos computes a route and captures that arbitrage in a route in the form of a better price for the user, that's also quite compelling in my mind. So you
Yeah.
have like protocols like us, people developing the protocol, and a whole bunch of actors that are looking to minimize this or capture it and deliver it to the user rather than pocketing it as direct revenue. Um, Although I will say there are plenty of arbitrage bots that execute on Odos that help generate some of our revenue. So it goes both ways. But
As is always the case.
as is always the case.
Yeah.
But I find that a very interesting and compelling visual. But I'm cautiously optimistic that we're not going to end up in that situation with at least the Ethereum ecosystem, just based on
You have
the
to fight it.
progress I've seen. You have to, yeah,
Yeah.
absolutely.
So anyway, did I miss anything? Oh no. Or
No, I mean,
all right.
I'll give maybe like the last kind of hurrah that I wanted to briefly mention is, we're pretty proud we crossed the $100 billion lifetime threshold. So $100 billion in volume over
Heck
the
yeah.
last 3 years. So we're pretty excited about that. And then right around the corner, I don't know how long it takes for this to come out, but like I said, next week from when we're recording this is kind of some exciting announcements around cross-chain being released and some a brand new fresh UX. So those
Ooh.
are the last little breadcrumbs I'll just shill Odos with. But no, I appreciate you taking the time and good to catch up with you.
Yeah. Where can people find out more?
Yeah,
Or
and I would say
you?
just odos.xyz is the website. So folks can go there and just read the website. Lots of good intel as to the value we bring. And then, of course, they can play with the front end app. And then, I'm Alex John Garn at Twitter, JON. So not a very exciting Twitter profile, but I'm around. So feel free to reach out anytime. I'm always happy to chat.
All right. Well, this was a lot of fun. Yeah. Thanks,
Yeah,
Alex.
appreciate it. Great to see you.